Hey guys, what's up? Daniel Sanchez here with Exponential Growth, and today I'm going to be launching my first ever series. It's going to be a series following the growth of my IRA. And if you don't know what a Roth IRA is, it is basically a tax preferred investment vehicle. And if you want to know more about it, there's plenty of videos on the internet. But if I get 10 likes, I will launch a video explaining what it is and why you should get one. So let's get right into it. As you can see, I have an account with Charles Schwab. I highly recommend them for their customer service and security. I'm not affiliated at all with them, but I do recommend their services. However, there are a lot of other brokers that provide this service. There is M1 Finance, Fidelity, and so many more. Do your due diligence and find your own, but if not, you can always resort to Charles Schwab. Okay, so as you can see, I have $6,724.09 in my account. So this is comprised of my total contributions, which are $6,000 in 2019, $500 in 2020, which I made on the 1st of January, and just over $220 in growth from my investments. This is pretty good. So as you can see, I made a significant chunk from today. So I made $62.2, which is just over 1%. And if you consider that to the return of the S&P, it's more than the Dow and the S&P, and just under what the NASDAQ returned today, which is pretty good if I do say so myself. So let's jump into my stock. I have several stocks and several ETFs, but let's break down the composition. So this signifies the shares. This is the price change, the day change of all the shares, and my total appreciation or depreciation. And it's important to note that these are the same because I did buy them yesterday, so the only appreciation that I have on it is the amount it's changed today. You also have the rating, which is research done by Charles Schwab. I don't pay attention too much because it's iffy and there are a lot of other things that go into it, but it's a good indicator to see relative performance. Additionally, there's the reinvest tab. So are dividends reinvested? Yes for yes, no for no, and then percent of total account. I really like that feature because it tells you how much weight you have in that category, and it's a very good identifier of where you are positioned in the total market. So after American Airlines, I have Boeing, DLR, Facebook, Microsoft, Snapchat, Twitter, and Walmart. And so the biggest appreciator has definitely been Microsoft, but I've also gotten good returns from Boeing, Facebook, and Snapchat on a relative basis. My worst performing stock has been Boeing and Walmart, but I do plan to hold Boeing for the long term, and they're going through a very difficult situation, and so I plan that they will make a revival. It's also important to note that I'm holding these stocks for the long term. Although I might rearrange some stocks, in the end, I probably will hold them. So even if they go down in the short term, I have long-term aspirations that they will go higher. So, as you can see, I own a wide variety of ETFs. So, the first one is CMBS. It is essentially a pot stock. And with the election coming up, I have faith that this will continue to outperform the broader market. Next up, I have the XLE, which is an energy ETF, and essentially it gives exposure to big American energy companies like Exxon and Chevron. Once again, I have MJ, which is another pot stock, which I plan to keep contributing to. Next on the list, I have IEMG and EEM, and combined, they make approximately 15% of my portfolio. And this has essentially provided me exposure towards emerging economies. So the biggest emerging economy right now is China, and it's been on a tear recently, and it's provided me $40 from that 15% exposure. So it's definitely an outperformer in the near term, and I plan to keep adding to that every single month. Furthermore, I have IVB, which is an ETF that's in biotech. So it's my exposure towards medical care space, which I plan to keep adding to, because we're always going to need medical care and it's always going to be a necessity for our society. Furthermore, I have the XLF, which is an ETF that gives exposure towards financial companies such as banks like JP Morgan, Citigroup, Bank of America, Wells Fargo, etc. It also provides a very good dividend. Next on the list, I have gold. This essentially is a hedge in my portfolio. I like it because with the stock market making all-time highs, I want to have some exposure towards a commodity, and more particularly gold functions as a hedge. So whenever stocks go down, it typically outperforms and moves inversely. Next on the list, I have BNQ. I like BNQ because it has a strong dividend, and once again, it acts as a hedge. While stocks can go down, the dividend usually maintains intact, and that's a good exposure to when stocks are making all-time highs. The last on my list, which makes up the biggest proportion of my entire portfolio, is VOO, which is Vanguard's S&P index. And so this essentially just tracks the broader market, the S&P market, which is basically the largest index in the US, which gives exposure to basically the whole market. And it's been a really good performer recently. It provided 30% returns in 2019, so I continue to add to that in the coming years and probably forever. So that is my Roth IRA portfolio. I plan to keep contributing to it every single month, and even though stocks are making all-time highs right now, I don't plan on pulling out anytime soon, due to the fact that it is a Roth IRA, and I will not be able to take out any of the funds. I must maintain a long-term outlook towards my positioning. These stocks could possibly be in for 50 plus years. So that's basically all I got. That's my Roth IRA portfolio. I'm going to keep continuing to add each and every month for hopefully as long as I can. And I'm excited to see where this goes. There's a lot of long-term opportunities to be sought after, and I just want this to be the epitome of exponential growth. Over time, I hope to see the effects of compounding interest take into effect and just see what comes of it. So be sure to tune in next time on my Roth IRA adventure. Thanks, guys.